Liron, welcome to the podcast today. Thanks so much for coming on.
Yeah, my pleasure. Great to meet everybody.
Thanks. So to get things started, if you can give maybe like a 30 to 60-second background on what you're up to and, both professionally outside of kind of your crypto bearishness and then kind of what you've done within looking at crypto over the last little bit, I think that would be helpful for our audience to hear.
Sure. Yeah. So my background is in computer programming, computer science. I studied theoretical computer science. I actually studied cryptography a few years before Bitcoin, just randomly in college. It was just an interesting elective. And then out of college, I founded a company called Quixie that it's not around now, but we actually raised $170 million, a lot of strategic investment from Alibaba, and we just completely failed. So we just burned through all the money, have nothing to show for it. And that was my first startup experience, starting in my early 20s. Since then, I've kind of learned my lesson. I run another company called Liron Shapira, and we currently we make 6 million a year and profitable and growing. So it's going a little better so far. And one of my hobbies is angel investing and also looking at the crypto space. And you probably know from my Twitter threads, I'm just not seeing a lot of value there in the space. And my approach to crypto is I don't take the angle of like the financial investigation so much. It's more like I come at it from the angle of an angel investor. When startups pitch me, I notice a lot of their pitches don't make any sense. And the moment I started looking at crypto pitches, I'm like, wow, this is like 100% doesn't make sense. So I started using my framework for analyzing startups, for analyzing crypto. And here we are today.
Awesome. Yeah, I think at Unbounded we kind of had, and now we have a different experience, but that was kind of our experience when we got the fund first started, which was, the amount of bad pitches that didn't make any sense. You'd have to sift through to find something that made sense. It was a lot of work relative to the reward. Have you seen that change over time since you've been looking at, crypto pitches over the last however many years, or it's still basically all not making any sense to you?
Has the incoherence level gone up or down? I feel like it's just been at like a constant. I mean, people keep like inventing like new things that don't make sense. I mean, just off the top of my head, remember when we had like loot? It's like different. I'm always, putting my hand on my face for one reason or another, like with these new things. But I don't think they've gotten more or less coherent.
Okay. So today you had a Twitter thread, and I'll drop this in the chat in a moment. Where sorry about that, Liron. You had a Twitter thread about Coinbase and kind of their what you called like securities grifting or something. I'll find this right now. Can you talk a little bit about kind of the problem you've had with how Coinbase has been representing the assets they have listed on their exchange?
Yeah, so I did my latest Twitter thread is a little dive into this recent blog post that Coinbase had where they said, Coinbase does not list securities, end of story. And I'm like, wow, that's a pretty bold claim. Because I also wrote another thread about this company, Braintrust, right? This blockchain company, it's pretty high profile. And if you look at how they use the Braintrust token, it's very similar to equity, right? And not only are the dynamics of the token similar to equity in the project, but you've got $100 million investment from Cotu, from Tiger Global. So everybody's treating it like equity. And Coinbase is saying we don't list securities. And then I went to the SEC's page where they give you the definition of what is a digital asset security, because everybody's saying like, oh, they don't give you regulation on crypto and digital assets. It's like, well, they do have a page that says what a digital asset security is. It's online, and it very clearly says that the Howey test applies. And it seems like Cotu, when they invested 100 million, was expecting profit from the work of others, right? So it just seems like they're listing securities and then they're gaslighting us like they're not. Like it's a pretty cut and dried case for me.
Yeah, Dave, if you want to maybe find the piece you wrote about this, but basically what we've seen in crypto for a number of years now is this kind of gaslighting of like, we don't know what the laws are, we just want guidance, and they don't want to hear that all these financial regulators have said, listen, like the old rules apply to this, and therefore just look at the Howey test, look at these different things. But folks just simply don't want to hear that and kind of pretend that it doesn't exist. I think often perpetrate a narrative to investors and to other folks, the money on the sidelines, that like, hey, we don't really know what's going to happen, rather than like, hey, actually the regulators have been pretty clear to us. There just hasn't been enforcement yet. And this just seems like another example of that, of, it's pretty clear that these things are securities. Coinbase is saying that they're not. They're going to argue we don't know yet, when the regulators have said we actually do know. And the difference now is there's just been more enforcement action than there's ever been before. So how do you think that's going to end? We've seen this kind of thing happening, of enforcement action increasing, language. There was that recent op-ed by Gensler from the SEC like a day or two ago, just increasingly, I think, more intense language from US and global regulators about crypto, and, more enforcement actions, but the narrative hasn't really changed within the crypto world. So how do you think this is going to end for Coinbase specifically, and all these folks that are kind of saying there's not really any regulation or clear regulation?
How does it end is actually a really, really deep question in crypto in many ways. A lot of different problems with the way people present different aspects of crypto is because they're always ignoring the how does it end question, right? They're like, okay, I get that there's like a rising bubble today, right? But like, tell me what's the equilibrium state, right? When all the forces come into balance, what does that look like? And to your question, it's, what does it look like when we reach an equilibrium of securities regulation, right? Or of token regulations? And I think it's fair to say like there will be clarity, right? It's not a decade from now, there will be more clarity than we have today. And it's hard for me to imagine, a totally new framework from scratch that doesn't have the same concept of securities, because it's not like there's actually something new and innovative here. Like they haven't actually invented anything, right? They're trying to do an end run around regulation, but for no good cause. So my best guess is they're just going to admit that they're securities. Like it's hard,
If we had to say 2 years from now, do you feel like most likely it's clear that most of these things are securities? The 3, what's your prediction?
Like it's hard to predict the timeline, right? But I mean, we saw what just went down now with the Coinbase scandal, right? So as I recall, what happened was, there was insider trading essentially, right? So this guy would have like his brother trade right as the token was about to be listed. And so the SEC came along and said, okay, we caught you for insider trading. And Coinbase is like, yeah, we were so happy that we helped you. We're just here to help, SEC. And the SEC is like, now these things that they were trading, these were securities. So let's talk about you guys listing securities. And Coinbase is like, what? We don't list securities. So I do think that you're just going to have more patterns like that, where the SEC is, it's been very shy. A lot of us crypto skeptics are just not happy with the SEC, right? Just kind of like dragging their feet. But it does seem like whenever they get provoked, they're like, okay, well, if you insist, I got to tell you this is security, right? So I think we're going to see more of that.
Yeah. So you focused, on Coinbase today, but you've kind of done some deep dives in some other companies, and some of the ones I noted that I think were probably some of your more popular, retweets and tweet threads were on Axie Infinity and Helium. And if you could say more about why you've covered Coinbase, these projects, and like to educate our listeners more about some of the problematic elements of what these, I don't know if project companies, which one is the better term, have done, that would be great.
Yeah. And just for some background on your audience, like, is it kind of common knowledge that Andreessen Horowitz sucks?
I actually have a question that's going to get to that. Feel free to start with it, but it might make sense to just start more with kind of the projects themselves, and
No, sure. Yeah. Okay. Yeah. Because I mean, this Axie Infinity, it's just insane to me. It's like you would never think that it would be possible that Axie Infinity would be a project founded by a reputable investor who, in the VC community. It's insane to me. But to start from the beginning. So Axie Infinity is a play to earn game, or it was built as such in last year in 2021 when Andreessen invested. I think 150 million is the amount of investment they led, and later they put more money in. If you look at the original pitch of what Axie Infinity was supposed to be, the concept of play to earn, I actually listened to a bunch of podcasts in it because I wanted to hear it from their mouths. Like I wanted to hear how they're pitching this. And so you get Chris Dixon saying on a podcast, like, this is so amazing that these people in the Philippines are able to like play this video game and they get paid. Like because of Web3, there's this new model where you get paid for playing a video game. And he kind of leaves it at that. And it's like, well, wait a minute, like get paid for doing what? Like for making art in the game and people purchase the art? It's like, no, there's no art being made. There's no economic value being made. You just get paid. And it's like, okay, so who's putting in the money? And the answer was, other players of the game pay you. It's like, okay, so some players of the game are taking a net loss to pay other players. Okay, why are they taking a net loss? And supposedly it's like, well, they think the game is really fun. But then the game wasn't fun at all. And yet it was still, growing really fast. So it's like the most obvious pyramid scheme, basically, right? So you just keep having new players buying in, and they make the game really expensive to play. It literally costs $1,000 to buy into the game in the heyday. And then yeah, you'd be playing it, and you'd hopefully make the $1,000 back, and you'd hopefully make more. But the people paying you were just themselves hoping the next person would pay them more, right? So it's like the most obvious pyramid scheme in the world, right? Dressed up as a video game,
Yeah.
and all the A16Z people just like bought it like suckers, right? Or else that's the best explanation, right? And then there's the more sinister explanation of like, were they trying to like scam their LPs? Like what's their, I actually think that they're drinking their own Kool-Aid.
Well, there's another explanation too. So it's not just scamming the LPs, it's scamming the other VCs and the public market investors. So I actually think that probably most people at A16Z and these other crypto funds on some level understand that like their game is buying into these tokens early and then, selling them at a higher price to someone else soon, independent of the economic value created more on the story. And to some degree, like any private market investor has to keep in mind the story of the company. And even if you're going public, the future prospects in the story more so than the current EBITDA or top line is going to be an important part of it. It's just around kind of to what degree that's part of it, and is there actually something real backing it up? I think, paying people to tell a better story to get you better connected, that's like a service that venture capital offers to the world. I think if they do that when there's no economic value being created, or if it's a negative sum game like an Axie Infinity, that's another story. And we kind of go into this like immoral grift from my point of view that basically every crypto fund has been engaged in. But yeah, I don't think they need to necessarily be scamming their LPs. They don't certainly need to drink the Kool-Aid. I think probably a lot of them have to some degree, but I think there's some cognitive dissonance where like sometimes they're drinking the Kool-Aid, sometimes they see that like, wow, I could like make an easy 3, 5, 10x by flipping this token soon. And then like those two things together make it kind of work. Or maybe if it was just the Kool-Aid, they wouldn't have invested. If it was just the grift, they wouldn't do it. But that kind of combination of optimism and grift kind of comes together, nicely in crypto. That's at least my take on it.
I mean, all your theories are plausible. It's just with A16Z, they're not transparent about what they're doing, so you can't know for sure. But I actually get the sense that they're going down with the ship. So, Chris Dixon made the Midas list because he invested in Coinbase. He generated like 13 billion in value for A16Z, right? So he created a lot of free rope that A16Z now has to hang themselves with going forward.
Yeah.
And my understanding is they didn't even sell Coinbase after it went public. So I think they've taken a pretty large hit on Coinbase, after getting like the world's best return. So I think they're going down with the ship. Like I don't think that they like strategically played us and timed the bubble. I think they rode the bubble up and now they're riding the bubble down, and they're going to be, saying these mental models the whole way down, right? They're going to be saying free lower rates, like, all that stuff.
So how is A16Z uniquely complicit in the crypto grift? Because I think you and I both have a sense of how they're really kind of leading this charge, deploying lots of capital, but just kind of, talking more about that fund would be much appreciated.
Yeah. So, I mean, they're the biggest, right? So I think that everybody who's investing money today at this late in the game, if you're investing money in these things like brain trust, like these projects that are incoherent, except they're on the blockchain, I think at this point, everybody has some moral liability, right? I can't speak to the legal liability. A16Z in particular, they're doing it the best. And they're also the people who you have high expectations for, right? So like if you're somebody like a Mark Andreessen or a Chris Dixon or any of their crypto partners, not only do your LPs and everybody in the industry looking up to you, expect a role model. It's also just tech people in general look at you and it's like, hey, what should I do with my life? Right. It's like you're just letting a lot of us down in terms of like, investing in these fake coins, which you can then see are scamming retail, and then not learning your lesson. It's just like, I no longer consider them role models. Right? Like if you talked to me like a couple of years ago, I'd be like, oh yeah, Andreessen's great. Like it's time to build. Right, software is eating the world. All that stuff makes a lot of sense. And then the other reason why you gotta give them this accountability is that in the case of things like Axie Infinity, there actually are a bunch of innocent victims, right? I mean, when you run a pyramid scheme, unfortunately, you get a bunch of poor people in the Philippines who are poor when they start, and they're just hoping to make some money. But then what happens is they actually lose money, right? So you're making poor people poorer, right? And I'm not saying they have to go to jail, right? I think that's too extreme, but it's just like at some point you got to stop playing the ignorance card. Like you got to take responsibility for what you're doing.
Yeah. What path do you think A16Z has to doing that and making it right in, Liron's world?
Yeah. I mean, let's say they woke up from a trance and they're like, oh no, what have we done? That's an interesting question, like how to make it right. I mean, look, I don't think that they have to like go pay back victims of the scheme necessarily, right? Because it's always like so messy to do it. Right. And it's like, look, I personally invested in Bitcoin and Coinbase in the very, very early days, right? So even I was writing it up, right? So who am I to blame somebody from writing something up? But I do think that they should just stop. I think they should close down the crypto fund.
Yeah. Okay. So you heard it. You heard it here. Breaking news. Liron thinks they should shut down the crypto fund. Maybe it's not the first time.
Shocker.
What other VCs you think are like most egregiously funding glorified Ponzi schemes?
I mean, you see all these names flash by, right? Like when I wrote about Brain Trust, it's like, okay, so we've got True Ventures in this one. Obviously Multicoin because it's a crypto VC. I mean, what do you expect? But you're seeing these big names. So we mentioned Coatue and Tiger, and then with Helium. So that one was an A16Z, but there's a bunch of other names. And then when I talked about Axie Infinity, right? So we had Paradigm, which is crypto focused, but there was another one in addition to A16Z, right? Let me go look that one up. But yeah, I mean, look, every VC has put their fingers in the crypto pie to some degree, right? Because they don't want to miss out. Let's see, I wasn't thinking of Animoca. Excel was it. So it's like all the top, nobody is like sparing themselves from this crypto ridiculousness. But Sequoia has a $500 million crypto fund, but they've spoken to the fact that it's like, look, anything greater than 500 million would be crazy. We keep it reasonable. And then the 500 million, a lot of it, we just use it for trading. Like, so they're not even really investing. They're just trading.
Yeah. Are there any funds doing things with blockchain? And I noticed I used the word blockchain versus crypto that you actually like. And are there any examples of companies that are leveraging blockchain for something that makes sense to you that doesn't involve this kind of Ponzi scheme or new crypto asset as part of the business?
So that question reminds me of like in religion, you have like different sects, right? And then you have like sectarian violence, right? So some people are like, only Bitcoin is the best. And some people are like, no, Bitcoin's the worst, but all the other blockchain stuff besides Bitcoin is the best, right? So you've got like all these different views. So I'm almost a no coiner. I do grant little exceptions. So I'm not like 100% no coiner. I'm like, look, Bitcoin, it's great. If you can't transfer money any other way and you can transfer it with Bitcoin, then great. Right. Or if you want to go buy some weed. And
how many people is that true for, you think, that they could only transfer something with BTC and absolutely nothing else?
I mean, I think in the world today, right, there is a sizable number, right? Like there's definitely millions. And then if you include darknet markets and Monero, right, like there's absolutely, if you need marijuana for your condition, right, and you can't get it legally, I think it's great that you can get it on the
darknet. I guess that's what I'm speaking to. When you're talking about like BTC specifically, like the market is supposed to serve as this kind of like anti-state money or cash. There's like much better examples of that, Monero kind of chiefly coming to mind, where in terms of like that, but that's another conversation. But I was curious if there's a BTC specific use case that you saw that like that was the only way or the best way.
Yeah, I mean, so, a money transfer use case, right? So the only personal examples I know of money transfer of BTC getting out of a jam really is just, using darknet markets together with Tornado Cash, right? Where Monero is better, right? So I don't have the personal experience, but I do think that it's plausible and it does happen that, when you live in certain countries where the government hasn't gotten around to fully blocking crypto yet, but they have blocked a bunch of fiat, right? So I think to some degree, Argentina's like this today, although I hear they're using stable coins, not Bitcoin. So when your government is just slow to ban crypto, then you do have a window of opportunity where crypto becomes the best way to thwart your government. But I don't think that that's because of blockchain technology. I think that's just the natural cat and mouse game of any technology.
Yeah. Okay. Well, we'll circle back post interview on some other things that you might enjoy. So kind of taking another turn, you've written extensively about Balaji Srinivasan, and most people that I find in crypto and in tech like have so much reverence for him, and I think rarely have a lot of specifics besides like he's great about crypto, he's great about the network state. What do most people in tech and crypto get wrong about Balaji? And as many kind of specific examples you can give would be great.
Yeah, I mean, look, Balaji's obviously an intelligent guy, right? And he's founded a successful company in the past. I do think that his thought leadership on crypto is just not making sense as far as I can tell. And I have, if you guys want to dig further, there is a post on my blog where I document some debates I've had with Balaji on Twitter. And it is interesting to see where our disagreements end up. Where, like, for example, at one point I had him making a claim. He's like, every average person, their computer is going to be sending out a bunch of different token transactions on the blockchain just as they browse the internet, right? They're going to be making essentially like micropayments, but he said like thousands a day, like claims that I found like pretty hard to believe. And I couldn't really get him to specifically unpack the claims, because then he'd go on to say like, look, I'm just looking at it high level. I just like to, make investments and see how they play out. So I couldn't really get him to be specific, but I think that if you read the stuff on my blog, it's a good flavor of like how debates with Balaji tend to go. I do think that he gets a lot of credit for being like such a genius, just because he like busts out a lot of like random cultural references. But the problem is that like I don't really see him making that many coherent lines of argument to like why something is useful. I think he uses the cultural references as just like an out. I mean, if you listen to him on any podcast, it's like, why does he need to talk for 4 hours and have like no takeaway? So I kind of have a beef with like the way he communicates points when I don't think there's much substance under it.
Yeah. So it's interesting, the one example that you kind of made about Balaji, as yeah. Well, in short, like we're incredibly bullish on micropayments here at Unbounded. And I think what he's describing is actually like an extremely likely thing to happen. But before kind of diving into like why we think that and why we think that will happen in a very different way than Balaji, like Dave asked something in the chat here, which is, how much does your critique of blockchain and crypto companies or ideas like this have to do with the inefficiency of like mainstream blockchains, like the BTC version of Bitcoin and Ethereum? And to what degree have you looked into kind of other blockchains that are more scalable than those?
So funny enough, I'm not really your average crypto skeptic, because I don't think I've ever bothered to bring up that blockchain is inefficient. Like, I do think it is a cause for concern, right? If Bitcoin is going to become our currency, like it's obviously a problem that's there to be addressed, but I just don't think that problem is going to make or break it, right? Like, if imagine Bitcoin was great and, the most possible people were adopting it as their currency and the other ones were just waiting in line until they could handle faster speed, I think somebody would figure out faster speed of some similar coin, right? So I don't think that's the blocker. So I just, it's an issue, but it's not a blocker. That's how I see it.
Got it. Well, I'm going to keep this brief so we can focus more on kind of the crypto grift questions. And our audience has likely heard a lot of this before already, but I actually think it's a really big deal. If you look at every blockchain today, except for really one, what you see is that as those blockchains have an increased number of transactions, more users, you see both the cost and then a lot of other things like uptime and security get a lot worse. So people start using something like an Algorand, like a Solana. Blockchains are often touted for their scalability. And then months later, after lots of adoption, you see the fees go up, dozens of times, hundreds of times, thousands of times. You kind of already saw this happen with Ethereum and BTC, but basically pretty much every blockchain, from our perspective at least, has a flawed economic incentive structure such that the inefficiency actually makes it a really big deal. Because, and Dave makes this point well in the chat, where, if there's a lack of scale, the use case can only be speculation or value transfer for rich people. If your business model depends on transaction fees being 1/10 of a cent and staying there or going down or even lower, well then of course you can't really have anything like that with the kind of the popular blockchains today. So I would encourage you to kind of, and we could talk about this after the interview, I would encourage you to look more at those types of opportunities, because I think the micropayment thing that's happening, like that's, I think, just how we're going to know that any type of data, whether financial or otherwise, is going to be safe and secure. And it's actually a lot cheaper and more efficient than kind of existing ways. It doesn't mean that you have to know that you're doing it. It just means that this will kind of change the way that we currently interact with all sorts of data.
Well, so with Dave's point, that lack of scale means the only use case is speculation. So like I said, it is a concern, but if you look at like the internet, right, like no matter how slow modems were, for instance, right, like no matter how hopeless it was to try to download an image on your modem, like the internet was still used as much as possible, right, and not just for speculation. So I don't think you see lack of scale as a blocker to something starting to get a real use case.
But I disagree, because what you saw with the internet is that it got more efficient over time. So the key isn't how slow or fast it starts, but it's which direction it trends. The problem with is if it trends in the direction of less efficient, then your unit economics go like crazy. So you saw this with CryptoKitties. You had like a good speculation business that became a business that couldn't possibly exist. because Ethereum's so damn slow and inefficient. And you see that with basically every one of these different crypto businesses, which is if you actually got enough adoption, even if most of these adoptions are for some type of Ponzi grift type thing, that still doesn't work because the blockchain underlying it can't do it. And I think what Dave's point, and our I think broader thesis on Unbounded would be that because of the lack of scale, it's like incentivizing people to use the existing tech and then only focus on the things that they know work, which is kind of just value transfer and speculation. And if the blockchains that actually scaled were more used, you might have a lot less grift-like behavior. And I think we see a lot of empirical evidence for that today in kind of the communities that are using scalable blockchains.
Okay, I mean, I get, it's easy to use it as an excuse, right? That it's not scalable enough. And so, and like, if, I could accept it if I just see like proof that it can, it's like, I just never see it having a use case regardless of if it's scalable or unscalable, right? So I guess we should focus on that.
Yeah, for sure. I mean, I think let's, in service of the folks on this call and the kind of some of the questions people emailed me in advance, let's go through the questions, and then I'd be happy to, share more about kind of the use cases that we're seeing today that are really only possible with a scalable blockchain. And definitely we agree that pretty much everything we're seeing in crypto, these are not real use cases. These are Ponzi schemes masquerading as some type of use case. And I hope that changes. And I think we're probably just a lot more bullish, given that's our focus, that it is going to change at some point, even if it's been really sad how long that's taken. So you want to be the Michael Burry of crypto. What does this mean to you? And specifically, what are the best ways you have found to date of expressing your view via a trade or long-term investment?
The thing about Michael Burry is he found really attractive odds, right, to bet on the housing crash because it was really cheap, right? You could buy essentially cheap options that pay out really big if housing crashed. So that's the kind of bet that I make on the upside when I angel invest in startups, right? I try to pay a little bit and probably lose my money, but maybe make a huge return. And so with crypto, I saw that upside in the early days to invest, a small amount to make a lot on the upside. And now I see the opposite, where I think it's attractive to bet against crypto, right? Because I think $1 trillion is just it's like 100 times more than I think it's really worth, right? If you look at the market cap of crypto. So I'm like, wow, this seems like a nice opportunity to bet that it's going to, to buy like deep out of the money puts on like the Bitcoin futures fund, for example. That's like an investment that I hold. Now I have to admit, I'm really not doing it on the scale of a Michael Burry. So I think that he was able to raise millions of dollars and like really go at it. I'm just doing it with some of my personal funds. So, I just take like 5% of my portfolio and invest in things that could like potentially, if everything goes perfectly, that 5%, it could suddenly turn into half my portfolio, right? So I could 1.5x my net worth if the crash comes in the next few months. And at the same time, I'm only putting in 5%, right? So if Bitcoin somehow soars, I'm not going to be ruined, right? Like, I want to be able to sleep at night. But I don't think that it's going to soar. So I guess I could put a little more, but my problem isn't that I think it's going to skyrocket permanently. Like I'm not like, it's not like in my heart of hearts, I think there's potential. Like I really don't, but you never know how long the market can stay irrational.
For sure. And this is something that at Unbounded and, current and previous like funds and trades that we've, with our personal capital and with LP capital, we've tried to express this view as well. And obviously, you're betting on kind of not just this thesis, but timing. So you mentioned kind of the instrument of kind of these deep out of the money puts. Like what time scale are you looking at those on? And again, if you're not comfortable sharing this, but presumably you want people to know this trade so they can, buy them.
Yeah, no, for sure. So honestly, I feel like the prices have gotten pretty high, right? So I don't think it's super attractive. Like I've already made some money on the way down, from the 60K. So that's also partly why I'm not going in like super hard right now, because I think the markets are already pricing in like, even though there's a long way to fall, it's pretty hard to get a 10x return at this point, just because everybody knows it's volatile, right? The put options are priced bet. If you see something like an Axie Infinity token, which is like so obviously going to crash soon, that's probably going to be a good trade. I didn't personally trade Axie. I guess I really should have in retrospect. Like I didn't think to at the time. And
there's not much of a liquid market or any market for deep out of the money puts on shit coins.
Thank God. Yeah. So is getting pretty wise to this stuff. So that's the only problem is, you got to be right and contrarian, and it's becoming less contrarian to be like, yeah, this stuff's going to crash.
Yeah. Besides like the deep out of the money puts effectively on BTC, are there other instruments that you're expressing this view?
So personally, just to make things easy and also to have a counterparty that I relatively trust, I'm just trading on Robinhood. Robinhood, I guess I trust it less than most brokerages, but more than like an FTX. So, the BITO futures fund and Coinbase, I think, Chanos was actually just talking on CNBC. He makes a great case of like the flaws in Coinbase's valuation.
Yep.
So that's a good one, I think, to buy puts on. And of course, MicroStrategy, those three are the big ones.
Yeah, I think when we looked into it, we found that like Coinbase and MicroStrategy is generally priced a lot more efficiently than any type of like BTC or ETH instrument, which makes a lot of sense because the Chainoses of the world are a lot more comfortable shorting an actual company than kind of crazy.
Yeah, although I would argue, I mean, Coinbase today, what is it, like $70 today? I mean, the book value Chana said was 20, right? And it was at 50 the other day. And like, I think they're screwed.
Sure, one can make the argument that the delta between BTC's current value and not the book value, but whatever value it should be, is perhaps even greater than Coinbase. I think the risk to the upside of Coinbase skyrocketing, I think, is also much greater than with something like Coinbase. As someone who's done it both systematically as well as event driven, while we feel good about the vast majority of our put and occasionally call buying in crypto, it has not worked out well for us to date. And I hope that the fate is different for you than it has been for us. Timing is everything with these options, as you know. And it sounds like you're more like trying to be the Cornwall Capital of crypto and not the Michael Burry, which for me is a much better. And in The Big Short, whatever his name is, the famous author, love him, love all of his books.
Caleb?
No, whoever wrote The Big Short.
Michael Lewis.
Yeah, Michael Lewis. So whoever. Michael Lewis profiled everyone except the guy who made all the money. And Michael Burry was the guy who they focused on in the movie because he made it this great character. But really, like, his risk reward was not great. He was actually shorting things. He wasn't buying puts. He could have lost the entire fund and was like relatively close to doing so. Where Cornwall Capital, similar to you, risks are relatively modest. I think probably even less than 5% of their overall portfolio, and we're able to make like a 70 or 80x return. So they definitely.
That's my style, man.
Yeah, exactly. I think for us as well. So I just wanted to ask that because that was kind of more from the team internally, is we've wanted to be that as well. But yeah, nailing the timing, even if your thesis is right, is I think is a lot harder than having your thesis be correct.
It really is. And it's been good education, because I was buying puts on Nikola Motors, right, a couple of years ago. It's been good education. It's hard to make money on these things.
Yeah, you only need to have one out of every few hit for it to make sense.
Yeah.
Did you ever read Mark Spitznagel, whoever the guy who runs the Universa fund that Taleb's associated with? He has a book on risk and investing, and his fund basically just buys these deep out of the money puts. Of course, it's a lot more sophisticated than that, but that's primarily what the strategy does, and how they returned some crazy 4,000 something percent.
I haven't read it, but that sounds like something I'd like, because the Black Swan I thought was pretty profound.
Yeah, I would highly recommend this book that Mark wrote. It's really interesting style, similar to Taleb as well. We definitely found it interesting. So before we open it up to audience questions, there's a term that we really like that you've read called hollow abstraction, and you use it to describe much of the crypto world. If you can please define the term and why you think the vast majority of crypto assets and companies building in crypto should be described as such. I think that's a good place to end at least the questions here on Unbounded side.
Yeah, I hope I can contribute this concept to the discourse, because I don't think that it's like a mental model that people have. And I just threw up a link in the chat to some writing I did that's not even specifically about crypto, but it's about rationality. I'm part of the rationalist community. And it's the idea that a lot of what makes people like unable to argue productively or to think productively is they don't realize that they're stuck on abstractions. Right. So I'll say an abstraction, Balaji is like the king of abstractions, right? I'll say an abstraction, and then like information wants to be free. And then it's tempting to be like, do you agree or disagree with that? And it's something to be like, well, I don't know if that's like digital libertarianism, or is that like a techno anarchism? So it's tempting to like push back with like your own abstractions. Like, okay, hold on a second. Information wants to be free. Okay. So I go to Amazon.com. I want to purchase a copy of a book, To Kill a Mockingbird. So are we talking about like, I'm going to get free shipping? Are we saying like Amazon has to not pay the author? Like, what can we be specific? Can we give an example of what you're talking about? So it's like I've opened the trap door on the abstraction, information wants to be free, and I've mapped it to something more specific. And now the reason I have this term hollow abstraction is because I think that a lot of the abstractions that people throw around in domains like crypto actually map to nothing. So it's as if information wants to be free. Oh, what do you mean? Like, should Amazon pay the author? No, or should Amazon stiff the author? No, they should pay the author. It's like, okay, should you get free shipping? No, you should still pay for shipping. And it's like, imagine I try to clarify information should be free. And at the end of the clarification, it's like, well, I guess I just meant nothing. Right. And like, that's what's going on with crypto.
Yeah, well said. Well, there's definitely some things that I want to follow up with you on, but before kind of those questions, I think it's a great place to invite some audience questions. So as always, feel free to type it in the chat, and if you'd like to turn your camera off and ask the question to Liron directly, feel free.
I have a question. Were you gonna ask a question?
I just want to say I'm loving this.
Yeah, likewise.
It's really fun.
Yeah, I'm curious just about your point of view on micropayments generally. So even if that's not achieved through blockchain, in your bio you described you've been in the crypto space or the tech space for a while. My understanding of micropayments is that it's kind of been a goal since the 90s to have this efficient payment method to enable different business models on the internet. So just like whether it's with blockchain, whether it's with crypto, whether it's with a centralized provider, are you bullish on the ability to send a payment as small as 100th of a cent over the internet at scale for new business models that haven't been able to exist prior?
So let's map the abstract concept of micropayments to more specific examples. So I can think of a couple from my own life of what micropayments actually means. So one would be like back when the iPhone had just come out and I was buying songs for 99 cents on iTunes and I was buying apps for like $2.99 in the App Store. I don't do that as much anymore, but I would then, the way it would work is Apple would just like consolidate the bill, right? So I'd be like, here's your invoice for the last 2 weeks and there's like $20 on it and it's made out of these micropayments. So that seemed fine, right? Like if blockchain or if micropayments technology were invented, I don't think Apple would care that much. It would increase their margin by like 1%, I guess. And then the other use case that comes to mind is like, okay, you've got usage-based billing, right? Like on AWS, you can rent a server. Okay, you rented it for 1 hour, so you owe us like $1 or whatever. So besides those use cases, like where else? I know the classic example is like, okay, I'm reading Medium, and actually I think Medium had like a $5 a month subscription in order to offer micropayments for the authors. So like, where are we missing micropayments in our lives?
Yeah, I mean, well, Dave, if you want to jump in, and then I actually have some slides that I think actually you've put together, Dave, that I think might be helpful to illustrate this. But
yeah, one example that I think about is like a search engine. So could Google charge me just per search? And like, what is the value of an individual search? It's, well below, obviously, credit card fixed fees. So could a search engine not create this profile on what you look at on the internet, not sell that to advertisers to target you, but just charge you for the service of finding the information that you want to find on the internet?
And you're saying, I mean, generally whenever you come up with an example of micropayments, the question is like, why not just run up a tab and then pay the tab, right?
Yeah, I think one use case of not having the tab is that when you have the tab, you have to associate all of like your searches in one profile. So what if I could just pay a black box that gives me some result, and every time I use that service, I'm not actually like creating a profile that is like all my unified search history, would be an example.
And there's a lot of risk from the perspective of when you have a tab, you pretty much always have identity, So if you're going to have a tab, if you're going to have this credit card relationship, you have to have kind of all this identity associated with things. And, credit card, the global credit card fraud industry every year is, it's hundreds of billions that gets lost in that type of fraud. And there's probably lots of other types of fraud that should be as part of a similar statistic. So a lot of that can kind of go away if you don't have to rely on identity anymore.
Okay, but I like, just to repeat the use case you're telling me, you're like, okay, I want to search with like ultimate privacy. And if I do 2 separate searches that each cost a penny and I run up a tab of 2 pennies, the problem is that now Google can link me. I'm the same guy who did the 2 searches, right? Because they have to keep my same tab. So like, if you're okay linking that you've done a session with 2 searches, then the problem goes away. And like,
Sure.
If once in a while you need extra privacy, maybe just for that one search, you have to pay a whole $1, right? Which is like the minimum single payment, right? And or if you really want an isolated transaction, right? It's like extra privacy costs you a little bit, but it feels like we're getting into an obscure use case now.
So here's another, that's frankly not a use case that feels, I think that was just like kind of a example of something new, not something that I think would be really big. This is a slide we have from our deck on just payment processing fees in general. And yes, there's some people that are going to ride Uber and Lyft a lot. There's a lot of people that use those apps kind of more sparingly, to the point where if you had to run up a tab over a long time, that wouldn't happen. So these are kind of the payment processing fees that both Uber and Lyft paid at the time of IPO. And you see like a really, really huge difference between.
Wait, how is it ever 9.5% of revenue to process payments? How is that possible?
Sometimes I guess a lot of their rides are, for not a lot of money. You look at Uber and they were kind of take over the world all around the world, but the 30-cent minimum transaction fee was still pretty big. So yeah, maybe not in the United States.
I mean, if you look at Stripe's fee, which is probably higher than what Uber pays, right? So the 30 cents plus 2.9%. I mean, so you're talking about like maybe like $8 or $9 would be how low it has to be to get 9.5%.
Yeah, and when I've used Uber in other parts of the world, regularly I'm paying $2 or $3 per ride. So there's big markets where it's significantly below $8 or $9. I'd be happy to send you the data.
It's so weird though, because Uber is also a perfect example of a company that can run up a tab.
It can in some cases, but then a lot of times there's cash flow and there's onboarding, which is okay for you and I, like running up a tab, putting down 10, 20 bucks is not a big deal. But there's a lot of people of which, the difference in cash flow between putting down $3, for each ride that you do versus putting 10, 20, 30, that's the difference between taking the service or not. That's
so weird that you think even today the Uber is 9.5% of revenue, even in the US?
Definitely not in the US. This is of all of their revenue. And at that time they were, I don't know the Uber statistics offhand. I'd have to look into what we pulled for that. But yeah, I would guess that in a lot of emerging markets that $8 or $9 is probably above the median ride cost still, for sure.
This is great content.
It sounds to me like maybe if we're talking about like emerging markets where people are poor, and the typical transaction is very small, I don't even know if I'd call that a micropayment. If like a couple dollars is like a pretty sizable transaction, it's more like how do we improve their payment processing infrastructure, even without calling it micropayments.
Sure. I mean, it's the same thing, whatever you want to call it, something to make payment processing more efficient. And that has, I think, a lot more benefits when the average transaction is a lot lower in poorer parts of the world. But I still think, increasing your profit margin by a lot for really expensive transactions is good as well.
I think Liron makes a really good point in terms of distinguishing between like an individual isolated payment for what is like a extremely small value for that user, and then just like a more efficient payment in general. The more efficient payment in general, I think, is sort of an unobjectively good thing. It might have even more impact in emerging markets where the average transaction size today is very small. I agree with Liron in the sense that I don't think that proves that for Americans, like you're going to be making a lot of purchases of the amount of like 1 cent or 5 cents or 25 cents. I think that there's a further burden of proof on us to make the case that that is something that will happen.
Zach, there's questions in chat also.
Got it. So yeah, we got from Joel here. Is there a way to disrupt the ad-based web with direct payments? Can you trust when you pay direct more than when you're the mark? And Liron's a great person for this. A lot more experience in the ad world than any of us here at Unbounded.
Right. So I feel like this is like an overrated pitch, but I getting into the minds of Andreessen Horowitz, like it seems like they love to say, I think I've even heard a direct quote of like, the internet really took a wrong turn. The fact that you're like using Twitter and an ad shows up, something's gone awry. Like you're the product. It's like, okay, chill out, man. It's just like, it's free service. Like, yeah, they show you an ad, you could also pay to like get your own ads there. You can use an ad blocker. Like, is it really like such a horrible fate? But to play devil's advocate or to be open-minded. Okay, so disrupt the ad-based web with direct payments. I mean, like, I think Twitter letting you pay to remove ads or Facebook letting you pay to remove ads is like a fine experiment. I suspect the reason they don't bother doing it is just because 98% of people don't want to pay, right? Like, why pay when you don't have to? And then let's say, can you trust when you pay direct more than when you remark? Well, you know, with journalism, what you get is everybody thought journalism would get better, you know, when you didn't have to cater to pander to advertisers. But then what happened is now you're pandering to your audience. Right. So like, I don't think there's anything morally wrong with an ad model. I think it's great that we have all these different models, right? And like capitalism is a beautiful thing. And like we have a system that lets us choose our model, and it's just awesome. I don't really see what Web3 is trying to fix.
Yeah, I think what's his name? Antonio. He wrote the book about Silicon Valley. He started that ad tech company.
Yeah, Chaos Monkeys.
Yeah.
Oh, yeah.
What's
yeah, he's got.
Yeah. So I think he and Chaos Monkeys wrote, I think, a really compelling pitch for why, like, basically the individual value of each user is relatively low, and like actually getting the max value out of each individual person is still something that's really, really hard and only possible in the context of like the system. Like, it's not Facebook that's getting it. Like the people that are paying top dollar. I'm gonna butcher his thesis, but he had a pretty compelling thesis to me for why I think even in a state where micropayments are ubiquitous, are really easy to integrate, you still see the ad-based model happening a lot. That being said, you know, there's a difference between saying ads are dumb, crypto-based Web3 micropayments are the future, and saying ads being the 99.9% way of consuming content might drop down to 80% or might drop down to 90% over the next decade or two. I think that's at least what we think at Unbounded here, and that given how much content's consumed and how that market is growing so fast, independent of blockchain or crypto, that's a pretty enormous market. You know, so I think for us, it's more of a question of like, not if the current ad-based model is immoral or bad and will go away. That seems a little silly, but more like, are there better ways without ads for specific use cases, specific types of, you know, users at scale? And for me, that, you know, that's an easy yes, at least on a personal level, and I think an easy yes for thinking about, you know, a lot of us here probably on the call be willing to pay a lot to not have our to have more privacy and to have a better user experience.
Yeah, I'm convincible, right? I just want to hear what's like the killer app. So for example, if you're like, man, it was amazing when Medium rolled out their $5 subscriptions in order to support the people there, because now it gets distributed. Like, I love that. I would have paid so much. I'd be like, okay, I guess there's some passion here, but like, I'm just not really seeing that much passion.
But that's not micropayments. That's just a smaller subscription. So
also true, but I think it gets distributed among the people you read.
Yes, but you're still like disconnected from the end of the value chain. So I think the same critique applies, at least from our perspective, which is like a big reason we're excited about micropayments for content is that like I have a Spotify subscription, I listen to a lot of my music on Spotify, and the amount of money that goes to each individual artist is really low. If I could just basically pay each person myself directly, I would be more inclined to tip. I'd be more inclined to give each individual person more money. They could then experiment with different songs and different albums. We're already seeing this with like some really high-end people doing this and getting away with it, like kind of Kanye, Jay-Z, Beyonce come to mind. But I think—
Wait, you think that if micropayments were possible, then that would be the key to competing with Spotify?
The key to competing with Spotify, I actually think Spotify will likely adopt a lot of these things. But I think that if Spotify were to keep their subscription model a competitor that allowed artists to basically charge whatever they want and for users to pay for that, and then these artists could then have music just on this other platform and not on Spotify, I think that has the potential to be meaningfully competitive with Spotify. But I personally think that Spotify is likely to integrate micropayments, and not just kind of completely ignore this for years.
I mean, it seems like Spotify is like a perfect example of a company that takes your, $12 a month, your family's $12 a month, and then like figures out how to pay it to all the different creators. Like, it seems like that model is fine, but you're saying that you shouldn't pay 12. You should pay exactly proportional to how much. Like, I'm curious to understand.
It's not a should. It's just about, Jack, it looks like you wanted to jump in here.
I always want to jump in, Zach.
Yeah, so jump in. I've been talking the whole time. Come on.
I think part of the idea is just that in general, I think that there are certain cases where unbundling what is currently like a bundled service would be desirable if you had a payment option that was appropriate. So let's scrap Spotify for a second. We can come back to it. But I think somewhere where we're seeing like a big problem in the content world is like the streaming services. You had cable, that was this big bundle. Now you have Netflix, much cheaper subscription. You watch content whenever you want. And now there's like 15 different subscription sites. And so if you want like the cable experience again, it's like even more expensive because you have to have all these different subscriptions. Why can't you just like pay for like a single show? And I think that it's hard for each of these shows to like create their own little portal and have their own payment processing, especially if like the entry price for like your first episode is 50 cents. But I think that in a world where it's really, people are really well set up, and this is obviously a big, in a world where that's a big step from where we are. But in a world where people are really well set up to just make a 50-cent payment with one click at a new website that they just visited, then I think that it is a superior model for most consumers to just pay for shows that they watch as they go versus have to manage like many different subscriptions at different content hubs, or even to have one global subscription. And that's really the Spotify model, is like a global subscription for all the content. And the problem with that is that there's kind of like a upper bound on like what you can charge for that type of service. Like if I'm a Spotify super user, I'm going to get a really low like cost per listen. If I'm a Spotify, like if I don't listen to that much music, I'd rather just pay per song. And I think that you talked earlier about like the equilibrium, like where's the equilibrium? I think that there's sort of a tyranny of the user who doesn't use it that much. And if I'm someone who wants to go to Spotify and maybe listen to an hour of music a month, but I don't like ads, and plus ads are really, they're not creator friendly. So creators don't want the ads, users don't want the ads, but users don't want the $12 a month. So if I can just pay $1 a month for my usage across different streams, and then the super user, I'm sure is happy to pay more because they love music, they listen to music all the time. I think that is a more stable equilibrium than what we have today. But there is this huge barrier between where we are and where that is, which is that today, no one is really onboarded to a micropayment system. And you'd have to have a lot of people who are onboarded to a micropayment system for that to be viable. So a big part of like what we focus on as a fund is how does that process actually unfold? Why would people get onboarded to a micropayment system? Are there use cases that are only possible right now with micropayments that are enough to get you over that hump? Are there other aspects of having like a Web3 wallet that could be micropayments enabled that could get people onboarded into that system? And it's not something that I think is solved yet. And that's part of the challenge that we're trying to help companies solve and invest in companies who are solving those challenges as a fund.
Okay. I mean, I feel like I could step in your shoes and like argue for the amazing, capabilities of micropayments, right?
That's not your job. No, you're the bearer today.
No, for sure. Yeah. But like, I get that there's abstract potential, right? But I want to, you shouldn't be too quick to move past, like, I feel like you were like kind of describing an example, but like, I don't want to let you go with this like half-baked example of how Spotify can be better, right? Because as I understand it, what you're saying is it would be great if I'm using Spotify less than usual, like other people should have to pay 12, but like I should only have to pay 7 because I only used it like 2 hours in the whole month. Right. Like that's kind of like where you're going. Like sometimes you get a discount or something. But like if that's how you want to roll, it's like, okay, well, maybe just like do the ad supported tier because you listen to it so little. It's like you won't even get to an ad. It's like, is this really a pain point?
Well, I think the problem with the ad is that the ad is not very good for the actual musician. The amount of revenue from the ads is very small, and it's a very inefficient way, especially for like an American, to monetize like their time. The amount of money that's going to be made from like a minute of listening to ads versus the cost to me of listening to those ads, it's very disproportional. And so both me as the consumer, and maybe not everyone thinks like this, and I'm not saying ads are going away, I'm not saying free tiers are going away, I'm definitely not saying that.
Yeah.
Me as a consumer, and I think for a lot of content creators, there's a much better price if we can connect directly than if we have to either go through ads, which is this very inefficient channel, or if we have to go through like payment processors today, which, if you're talking about $1, then you're going to spend a large chunk of that dollar is going to go to the payment processor.
Right. Actually, you know what? I can forget the ad side of this. Let's just say, what if I said, hey, Spotify has a new tier. You don't have to pay $12. You can pay $6, but the music is just limited, right? The amount you can play. Doesn't that solve your problem?
I think it would. Maybe that's an improvement for Spotify. But I think that micropayments is, I would say, like a better path towards that type of experience, like pay as you go versus tiering it based on like, this is the maximum amount of hours, then we're going to charge you more.
It's allowing you to tailor, to tailor kind of their own experience, where if Spotify has 2, 3, 4, 5 different tiers, there's only so many tiers you can do before you confuse people. Where if you have the ability to kind of make your own path, pay for whoever, your preferences are going to be expressed very differently. Right now, Jack and I both went to music school together. Like, we love supporting content creators. We're musicians ourselves, but our avenue for like efficiently expressing what we'd like to do, which is like, hey, the artist we really like a lot and like do it easily. There's no easy way for us to do that right now. And we personally would both kind of do that a lot more. There's a lot of other people in the world, not just in the wealthy United States. Yeah.
If you listen to a bunch of different musicians, it's like you wish that Spotify knew that you love some of the musicians more and you could like tip them more out of your $12.
I don't wish they knew. I wish we had the option, not just to tip, but for musicians to play around with things. So kind of, you've read this 1,000 True Fan thing around. Yeah. So I think that philosophy of like, okay, I have 1,000 true fans, and like, rather than trying to like go for 2 million plays on Spotify and get like $30, like, how can I make it where my fans are really happy to pay me $5 per listen, or $2, like something crazy higher than what happens on Spotify today. Those are the types of things right now that, from my perspective, I think are only possible some type of efficient micropayment system. Yeah.
I mean, Patreon is specifically a platform for having true fans, right? And so is Substack. If you really love an artist, you probably want to listen to Spotify and support them on Patreon and go to their website and buy their poster or whatever.
For sure, with the current options today, for sure. Yeah, I think you're definitely right. I think there's also many additional types of options that are not included, not just within Spotify, but also with Patreon. There's a lot of issues with Patreon in terms of, how much, not just how much they're taking, but again, how much actually goes to the artists at the end of the day.
When I analyze pitches as an angel investor, there's this thing people do, which is like, you name some stuff that's plausible, right? It's like, yes, it's plausible that like I could be more creative how Spotify pays out the artist. Okay. And then therefore let's generalize micropayments, and it's tempting to like say something plausible and then generalize and then like get excited about a pitch. But what I do is I'm like, wait, can we just drill down into the example? Like, can we just come up with one example that's like so good? Like, I'm like, take my money now. Like, this is a killer example. And if you can't think of one really killer example, I wouldn't continue with the abstractions. I would like stay on the killer example part of the question.
Yeah. I mean, I think from my perspective, if like paying for something in a way right now that costs the business 25 to 30 cents and being able to replace that with 1/1000th of a penny doesn't feel like a killer example. Or are you saying that's like pre the killer example? That to me feels like a very killer example where you now can have more types of business interactions as a result of that.
I think I'll argue on your behalf. I think there's a bit of a Mott and Bailey here where there's the efficient payments and then there's like micropayments.
Okay.
And I think that if we can't retreat to efficient payments as our defense of like why micropayments are
sure.
great use case.
So another example, Liron, again, this is, kind of talking up our book here, but it's just one of the best examples that I know. We have a portfolio company that allows folks around the world, most of their users are like in Indonesia, Nigeria, to trade and invest in US equities and US equity derivatives in increments as low as 1 cent. These are people that, have previously expressed to the founders, both on social media and kind of directly, they've wanted exposure to US equities before, and now, they're able to kind of have that exposure, whether for long-term investing or for trading, where they didn't have a portfolio that was big enough where it would make sense to, kind of do your minimum $1 or $5 transaction, other types of exchanges, but they can now have like a diversified portfolio of just like $1 or $3 or $5. And to us, that might not seem like a lot, but to a lot of people, it's been, I think, like a really killer application for them in terms of allowing them to actually make the types of trades or investments they want. That's not really possible without micropayments.
I mean, I think if you just say, look, you got to buy at least $10 of a stock, does that really price out that many people?
It prices out millions of dollars of revenue worth of people, at least for
I
this.
mean, can't they just like wait a month to save up the $10?
I mean, I'm just telling you what's happened in the world today. I don't personally, you know, I've been lucky where that's not been my personal experience, but I wouldn't discount the billions of people in the world that, you know, that might be difficult for them to do.
Okay. Yeah, I mean, it just, you know, it just seems like you don't need you don't need to put a penny in a stock, right? Like, I don't know if you'd call that a microtransaction.
You're saying we don't need to put a penny in a stock. A lot of people, you know, they have
What about a dollar? No.
Yeah. I mean, even if you're putting $1 in, like, there's no way to easily put $1 without getting reamed on fees with pretty much any other solution today.
But I mean, the reason you're buying these stocks is you want to hold them for decades, right?
For some of these people, yeah.
This is
So
you can do derivatives with this platform. So you could buy $1 with leverage.
Yeah.
yeah,
Some people are doing degenerate derivatives trading. Some people are buying and holding and everything in between, you know?
like I guess so. I would just be curious to flesh out more context, right? And that's what always happens with these examples of like, you know, claimed use case, right? It's like, just give me more, like, what's this person's life? What's their income, right? What does their portfolio look like? And then once we have all that context, it's like, wow, there's just no way around the fact that they can't do these 1 cent transactions, right? At that point, maybe I'll be convinced.
Cool. Well, we could maybe continue this offline, but I think that's a good kind of skeptical place to end the recording and formal interview. So Liron, thanks so much for joining us today. Thanks everyone for being here and asking questions, participating in the chat, and we look forward to the next webinar and podcast together.
Thanks, Zach.
Thanks.